Good evening, Nick Inman from VolumeProfileTrader.com on Thursday, June 28th. And the S&P opened up pretty weak today, and this is a great example. When the market is range bound like this and really whipsawing around, every day has been an opportunity to trade on both sides of the market. I think that's telling you why it makes a lot of sense if you have a net long portfolio to buy some protection into the close for the following day. Today was a great example. Yesterday, the top of this month's high volume area, I'm going to get rid of these drawings and going to redo this. The top of this high volume area, here comes price closing right at it. If you have a net long portfolio, what's the downside of owning some type of protection going into the close? And I'm talking about on the 27th. And when the market is whipsawing around like this, every day is different. The chances you can buy back that protection for a profit is pretty high, and it's not going to be a guarantee, but it's there. And worst case scenario, you take a small loss or break even. But today, for example, I know going into the close on the 27th, yesterday, I bought some SPY. Now they were July's, but they were July 132 SPY puts. And today, sure enough, market opens weaker. There was no reason to cover them at the open. Let the market tell you what it's going to do. The only news you had coming out today was the termination of the healthcare law and the EU summit. And once that healthcare law came in, bam, the market traded down basically to the lows, to the bottom of this monthly high volume area. And guess where it was a good spot to take profits on that short? Right at or near the lows. And the reason why is because we're still range bound. There was no news out today that gave the market reason to trade below these current lows, and sure enough, that's why you saw the shorts covering at the end of the day. So what was just a position to hedge my net long position in my portfolio, I ended up taking those puts off for a really nice profit. And it just happened to be that the market moved 20 points from where I bought them to where I bought the puts to where I sold them. But that's not the point. If I knew the market was going to move 20 points down like that, I would have bought a lot more, and I would have sold them right at the bottom, but I didn't. But it was just to hedge, just in case the market did exactly what it did today. Now, towards the end of the day, the market rallied. It rallied hard, up to the highs. Closed. Went here. Let me just show you. Okay, here we go. Market happened to open right at the high volume area. Can't get above it, pushes down, basically touches the low at the bottom, and then what do we get? We get a nice U-turn, huge volume, pushing up and out of that high volume area. I did send out a recommendation today, and actually I realized after the fact that, well, not after the fact, but I mentioned something on Caterpillar and Deere, and I said that I didn't have a position, but I was watching them. And the reason why was because both looked to be at opportunistic levels to get involved at from the long side, at least for a trade. So I pull up something like Caterpillar, value area low for the year. Only one other time on this chart has price gone below this level. And you can see at that time it was a great buying opportunity for pretty much a double. And with the volume that we saw today, you can see Caterpillar had, wasn't up a lot today, but Caterpillar had a nice volume day right at, what should be support. There's no reason why Caterpillar can't bounce $5 to the upside. If you're looking at the 1 hour chart, we had a major low this morning, low 80.96. We can't make new lows, and then we have a huge volume bar going into the close. Definitely more than qualified volume. And you take your shot. You see if we can get up towards 86, the point of control for the month of June. My bet is we can, and that's why I did buy Caterpillar at the end of the day. And I'm putting a stop right below 80.96 because there's no reason to take more risk on than that. My perception is that Caterpillar is going to bounce, and it's going to bounce up towards 86 or so, and it won't revisit these lows. And if it does, I'm wrong, I get out. But if it doesn't, I'll make some money and I'll be happy. Deere, a little bit different of a look. Deere's bouncing off its point of control for the year. We dipped below it, came back, stabilized against the point of control for the year. I actually think I mentioned it down here. I actually think I mentioned it on this day, the 26th. I'd be curious if I did or not. And sure enough, we've seen, follow through. We're above the highs for the month. That's what we want to see. Now you want to see, can we test this value area for the month of May and get past it? Just because one thing I do like is we have so much volume down here that it should provide a good base for Deere and a good reference point. Now, one other thing to consider is the most recent volume, and you can see we're right at this high volume here for the month of May I was just talking about. And you see the point of control, huge volume up here, and this is just on a 90-day scale. So the most recent volume, it's definitely against Deere, and the likelihood of it continuing higher, is there. I mean, it looks like it's going to. We have another higher low here, a great bounce off of the intra-month point of control. Last month's value area held well after we saw a complete rejection for a couple of days. Got back up, traded above these levels, and now we're seeing if it can break out. But out of the two, I like Caterpillar just because we're not in this 3-day up move. We're at a defined bottom. So aside from that, let's focus on what probably really matters. The euro finished weak today. We had a small bounce off the lows, but nothing to write home about. No volume behind it. We're waiting for the resolution from the EU summit. I heard something after hours saying they're going to do 120 billion euro bond purchase, something like that. I don't really care. All I care about is what the market, how the market reacts. The chances of them printing money are pretty high, and you're going to have to act accordingly, especially if you want to make money. So you look at the dollar. The dollar ends up, the point of control for the month ends up just being a pause. The market continues higher. Now we're at the value area high for the month. We'll see if that gets rejected. It may. But overall, the dollar continues to be in an uptrend. That long against May's value area low, point of control, was the buy. And it was and there's no reason to get out of that trade. Maybe today you got shaken out, towards the early part. Well, I guess that would be overnight, so probably not. But overall, the dollar it's something that you want to have enough of in your portfolio because look at what it's doing. It's going from the bottom left to the upper right, and that's something that you want to be a part of. Okay, gold. I sent out a recommendation yesterday saying I was going to buy a GLD 154 by 157 call spread, and the call spread was for $1, and it didn't take long for me to figure out I was wrong. How long? Pretty much this morning I was selling, and I realized it was a wrong position. I took a small loss on it, and you move on. There isn't much more to it. There's no reason to hold it made a new low today. You're looking for it to move higher, and it makes a new low. Don't be a part of that. That's not worth it. I was on the wrong side of the trade. I thought we'd get a bounce. We didn't. We are seeing lower prices in gold. Maybe it bounces, tomorrow. I don't know, and I don't care. I'm out of the trade. Took a small loss and moved on. But I don't want that loss to turn into a big loss. Just to give you an update, didn't do a video last night, but yesterday I got stopped on Baker Hughes at a break even on my put spreads, and so I ended up locking in a little bit of profit, which is why you do the cover and run strategy. But it ended up being a decent winner, and that was about it. Really, I can't say too much more about that. It's already at the bottom end of the chart. You can see it's gone from 81 to 37. So from there, and I was selling at 41. Now it was based off of volume, so it was a trade that worked out. But you have to put it in context. You got to realize that you're selling something that's already been sliced in half, and you can't be greedy about this. You can't expect it to go to 20, even though it may. You don't want to be a part of something that comes back in your face because you see a short covering rally or something along those lines. So I just wanted to give you an update. Covered the Baker Hughes position, and leaving it at that. Chevron continues to work. The 26 was your buy, and now you're seeing follow through. This could get, it should test 104 or so. I've already taken profits on half of it, but we'll have to wait and see. A few other things to mention. One, RIM's going to be opening up in the $7.50 range, something along those lines, because they reported earnings, and what a surprise they missed. Shocker, right? They're pretty much in a situation where they're going to have to sell their assets or they're going to run out of cash. So don't bottom pick this. It's at the end of the day, 20 years from now, you're not going to care if you bought RIM at the bottom or if RIM was a takeover target and you happen to be involved. If you really want to speculate, then buy some leaps on RIM. Don't spend a lot of money, and maybe you get lucky and they get taken out. Say $14 or something. I don't know. I don't really care, to be honest. We took our shot at RIM the last time they reported earnings. You live, you learn, and you don't do it again, and that's how I'm approaching this. Now, RIM has been an awesome sale if you've been short, but it's pretty tough to get short something that has the potential of being taken over, and that's why you kind of avoid it. So that's one thing. Another, Ford comes out with I believe they came out with earnings tonight, and they said, I don't know if it was earnings, but they basically said that they had some pretty big losses in their Europe plant, and they are, considering, I think they said this, they're considering closing some of their European plants or something like that, but they're concerned that the losses could grow bigger in the Q3 and 4, so that's something to be aware of. And also, Nike, weak China sales. Nike's down in the, I think it's the 87. They were down like $10, $12. They got hammered. This is something that you can probably pick up for a trade tomorrow for a quick bounce, and that's all I would consider it. Maybe it's a very nice low on Nike. I remember back, I believe it was right here. Let's see. Let me get to it. Bear with me 1 second. Okay, these lows here. This was a great buying. This was a great buying opportunity on Nike. And you're going to get a similar open tomorrow. It's going to open somewhere around 87, 88, and I think you can take a shot at it to the long side. There's a lot of regret up here, So realize that there's going to be a lot of selling pressure, but there's also the potential for some type of snapback. That's something that, you define your risk, you wait for the lows to be established, and then you take your shot to the long side. If that's something that you want to do. But don't, it's just for a trade, and, maybe you want to keep some, say 25% of that trade on just in case Nike continues. What if it's a big low like it was here, and you see a pretty nice, closes the gap up to 97 or so, where you plan to take the rest off, something like that. So really, that's all there is. I would expect more of the same tomorrow. Tomorrow's Friday. You're going into a holiday week next week with the 4th of July. We do have some news coming out next week. Tomorrow we do have personal income, 8:30, Chicago PMI, 9:45, and consumer sentiment at 9:55. So we should have a decent morning of trading. We'll have, wait and see. I'm sure there'll be plenty of opportunity up until around noon Eastern time, and I'm sure that's when the market will die off. So anyways, hope this helps. Hope you're doing, a decent job trading. You're not going to be hitting home runs here, but trades like going short SPY at the top end of the range makes sense. And it happened that, the market flushes to the bottom end of the range in one day. Those are the type, if you're not day trading, those are the type of profits you can expect during these range-bound markets. Finding names that outperform like Chevron, it goes with being a little lucky that the name continues to outperform, but you just stick with what's going on, or what's working, and you don't overexpose yourself to one way or the other, long or short, and you want to make sure that you keep your losses small, and you take your winners in a range-bound market at the extremes. And that's really all there is to it. The market's going to trend again, and it's probably going to do it relatively soon, just because of where we're sitting in the point of control range, which usually means some type of move is waiting to happen in the S&P. Just pointing out also, 13, looks like 1321, 1322. This range is the point of control for the last 3 years. The last time we had something like that was at these huge lows back in August and October of last year. So be aware of that, and be aware of the opportunity there. So take care, have a good night, and I'll talk to you this weekend.